Now, most of you last time were talking about the SA economy. You remember that I did, of course, indicate that one of the main things that is dragging our SA economy down is obviously inflation and, of course, load shedding. And, of course, I did indicate that inflation is something that obviously we are seeing it impacting not just our economy, but it is also impacting other countries like the US. And like I said in the previous video where I was discussing about it, I did indicate to you that, of course, it was stated that due to this load shedding, we might see South Africa as losing around 4 billion rand per day, which is something that is not good at all. This definitely is going to have a huge impact on our GDP. And of course, the prediction was made based on the fact that should load shedding continue. I mean, I even gave you the latest sentiment from one of the big mining companies in SA, which is Stillwater, who indicated that should load shedding continue, they are definitely going to be impacted when it comes to production wise. Stillwater won't be the only mining company to be affected by load shedding, but there are also other big mining companies and big businesses that are definitely going to be impacted by this load shedding that we are seeing it being implemented on a day-to-day here in SA. Now, ladies and gents, today I bring you some more news as to what is it that we can expect from, of course, our economy going forward. I mean, the fact that, like, guys, this load shedding already, you can see that it is not, of course, doing good or doing any good to our economy. I mean, obviously, we are seeing, of course, even the rands or the ZAR against the US dollar. Of course, we are seeing our currency weakening, which is one of the things that is, of course, sad. But you need to obviously diversify. Make sure that when you're investing in the stock market, you try to obviously also buy international stocks, buy stocks in the US, because if you just put your money here in SA, I mean, we are seeing big companies like Stillwater indicating that they are going to lose money due to this load shedding. It's going to affect their production. And if a big company like Sibanye is being impacted by load shedding, it means that there are also big companies, or some of the big companies that are producing or doing some production here in South Africa, which are definitely going to be affected by load shedding. So the good thing, or one of the good ways which I think you can try sort of like hedge this situation in SA, is to diversify your portfolio. Buy international stocks as well, buy international ETFs as well, because if you just put your money here locally, then, ladies and gents, when these companies or when these big companies are not able to report good revenues due to the fact that their production was disturbed, then you are also definitely going to obviously lose your money, because the share price won't perform the way they should. The share price will definitely obviously give not the kind of returns that you were looking for. So it is always good that during this time you consider diversifying your portfolio, you consider investing in other countries, in other stock market exchanges. I mean, one of the platforms which I use gives me an opportunity not just to invest in SA, but to invest in US, to invest in Australia, to invest in Europe, which is something that is truly amazing. And one of the things that I believe you should consider doing is that might be another way that can help you, of course, see some good growth, because countries like the US, though the inflation is still very high there, but one way or the other, this thing or the situation there will ease soon, and that, ladies and gents, will definitely make the stock market to also fully recover there. But locally, though the inflation might be better, although we can see maybe inflation becoming better a bit, if we continue to have this kind of a situation of load shedding, or Eskom implementing load shedding, then we are still going to see a huge impact in our economy. In fact, Fitch, which is one of the international credit rating agency, just released a statement indicating that obviously South Africa GDP this year might grow by 2.3%, which you know already that Nedbank has already came out to say that no, they're seeing a 1.7% growth in GDP this year due to load shedding, due to the Russia-Ukraine war, and of course inflation. Now, the fact that obviously these, of course, Fitch, which is the credit rating agency, still sees the 2.3%, I suppose it's still a very good thing. But then in 2024, they are predicting that SA GDP will fall, or will see it growing by 1.7%, which I suppose it's not good at all. I mean, what the country ought to strive for is to continuing seeing or continuing growing their GDP, as it is something that is always good. I mean, the country needs to make sure that if they grew their GDP, like in 2021, you know that SA GDP grew by around 4.9%. They should strive to always try to maintain that, or even grow over than that kind of growth we saw in 2021, not vice versa, seeing, of course, the GDP going down. That's not something that obviously attracts a lot of investors. Now, one of the things that obviously Fitch also touched base on is the Eskom issue, and they did indicate that Eskom, it looks like they need 150 billion rands to get out of the kind of situation they are in, to get out of this load shedding. They need around 150 billion rands, which, if you are to ask me, that it's going to definitely obviously make our national debt, or the South African debt, to be much higher. I mean, already you know by now that, of course, our national debt against our GDP is currently sitting at around 68.7%, which obviously, as seen on the screen, you notice that Fitch is showing or indicating that by 2024-2025 financial year, we can see, of course, our debt against the GDP sitting at around 75.9%, which this is not good, because I personally think that where we are going or headed as a country, we are not going to be able to service this debt, which that definitely means that even on our economy, when we look at our economy, 2024-2025 financial year will be struggling, of course, to service the debt that we have as a country, which is something that is not good at all. So what do I personally think that one should do? And of course, before I forget, make a disclaimer: I'm not a professional financial advisor. This is just an entertainment video, and you should not take it as a professional financial advice video. If you seek professional financial advice, you already know what to do by now, and that is, you know, to go and consult the professionals. But my opinion, which is an entertainment opinion, is that I personally think that diversification, like I say, or like I continue saying, or as I've been saying, is the only way that obviously can help you hedge the kind of maybe probably difficulty that we can experience in the economy or in our SA economy. Don't just put all of your money in SA stocks or in SA companies, as obviously the fact that with the current economic conditions that we are in, the companies that are, or some of the local companies might get a serious hit due to the current economic conditions, like, of course, like I said, load shedding and, of course, inflation. This might be a problem to some of the local companies, and they might not report the kind of revenues that probably you are expecting or they projected due to, of course, load shedding and inflation. Now, if you are to obviously move some of your assets, some of your money outside of SA, buy US stocks, buy US ETFs, buy, of course, other ETFs, you are able, or you can easily see, of course, a balance in your portfolio, and in an instant where maybe you are not seeing your local portfolio maybe performing the way you want it to perform, then obviously your international portfolio will always kick in and try to obviously revive your overall portfolio. You see your portfolio well balanced. Don't just put all your eggs in one basket or in one economy, but try to diversify, which is something that is always good and something that I'm personally doing. And by the way, when I remember someone on Facebook yesterday posting that obviously the ZAR to USD, ZAR, our South African rand, it's weakening when we are comparing it to the USD, which is something that obviously to those that have money in the US stock exchange can definitely see the growth in their portfolio when this happens. So not only does, of course, diversifying will see or make your portfolio grow maybe when those economies recover, but if our economy is to continue declining, then we are definitely going to feel the heat. Otherwise, with all that, guys, I make tons and tons of stock market investing videos. And if you think that this video was amazing, please don't forget to hit that like button, comment, and subscribe. And once you subscribe, don't forget to hit that notification bell so that at least you get notified by YouTube every time I release a new video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And God bless you all.